You know, if there's one lesson that's been beaten into me more times than I care to count, it's this: the market doesn't pay you for being active. It pays you for being right, and being right often means you've got to learn to do nothing. That's the hardest part. Do you see what I'm saying? Everyone wants to trade, everyone wants action, but the market isn't a slot machine. It's a weighing machine, and it's a waiting game. You don't get paid for being early. You don't get paid for being late. You only get paid when you've got the setup, and you've got the patience to wait for it. Now, why do most people fail at this business? Is it because they can't read a chart? No, plenty of them know their lines and their bars. Is it because they don't have enough money? Not always. They fail because they cannot wait. They must have action, like a man who must have cards in his hands. That itch for excitement, that craving for movement, it's poison in trading. Have you ever caught yourself staring at a chart and thinking, well, maybe I'll just put something on just to be in the game? That's the urge that empties accounts. When I started out, I was a boy in a bucket shop, watching tape tick by, nickel by nickel. I thought the trick was in being clever, spotting every little wiggle and trading it. And sure, sometimes it worked. But most of the time, it didn't. I'd win a little here, lose a little there, and by the end of the week, I had nothing to show for all my effort. That's when I realize it's not the constant trading that makes the money. It's the sitting. It's waiting for the real play to show up. Doesn't that sound strange? That you make the most money not by trading, but by waiting. But it's true. Let me tell you, the market has a way of punishing impatience. If you chase, you pay. If you guess, you pay. If you force trades, you pay. But if you wait, if you sit with your hands in your pockets until the picture is clear, you'll be amazed how the odds tilt in your favor. The trick is believing that you don't need to be trading every day. Do you think the big money is made in constant skirmishes? No, the big money is made in the big moves, and big moves don't come every hour. They don't even come every day. They come when conditions are ripe, and until then, you wait. Here's the thing about setups. They're like a train schedule. If you miss one, don't chase it down the tracks. Another one will come. But you've got to know what train you're waiting for, and where it stops. Most traders don't even know their setups. They just jump on anything that moves. That's not trading, that's gambling. And gambling is a fine way to ruin yourself. You wouldn't walk into a casino and think you can beat the house by playing every hand, would you? Then why do it in the market? The best trades I ever made, the ones that paid for houses and cars and everything else, they didn't come from luck or hunches. They came from setups I knew, patterns I trusted, conditions that lined up, and until they lined up, I did nothing. That's the secret most won't accept. Waiting looks like doing nothing. But in truth, waiting is work. Waiting is discipline. Waiting is the trader's real craft. Can you sit there with a chart in front of you and do nothing? Can you hold back when your fingers are itching to click the button? That's the test. I used to think I had to catch every swing. Up, down, sideways, if there was a move, I had to be in it. And you know what that left me with? Commissions, mistakes, and a bruised ego. Then one day, I caught myself. I realized I didn't need every swing. I just needed the fat part of the move. The big middle, where the odds are clear, the momentum is there, and the setup is undeniable. That was a revelation. Do you understand what I mean? The market will always give you chances, but not all chances are equal. Some are noise, some are traps, but a few are golden. And you've got to train yourself to wait for the golden ones. Now, let's talk about charts. Charts are your map, your compass. They tell you where you are and where the market has been. But they won't whisper the future in your ear. That's where setups come in. A setup is nothing more than a condition, a signal, a set of circumstances that tilts the odds. Maybe it's a breakout above a range. Maybe it's a pullback to support. Maybe it's a volume surge that confirms strength. Whatever it is, you've got to know it like the back of your hand. Because if you don't, you'll see setups where none exist. Tell me, have you ever forced a pattern onto a chart just because you wanted a trade? That's the danger of impatience. You start to see what isn't there. And here's another truth: the market won't reward you for almost setups. Almost doesn't pay. It's either there or it isn't. When it isn't, you wait. That's what separates the professionals from the amateurs. The amateur needs a trade. The professional needs the right trade. Can you see the difference? I'll give you an example. In one campaign I ran, I waited weeks for the stock to form the right base. Every day, it wiggled and teased, but it wasn't ready. The boys around me said, "You're missing moves, Jesse." But I knew better. Then one day, the volume swelled, the line broke, and the setup was perfect. I went in heavy. That one trade paid more than a dozen small ones could have. And I could have missed it if I had wasted myself chasing noise the week before. Doesn't that make you think about your own habits? Patience in trading is like capital in the bank. Every trade you don't take, every bad setup you skip, that's money saved. And money saved is money ready for the right play. The market will tempt you with half-formed patterns, with maybes and almosts. But you've got to resist. Why? Because your job isn't to play every card, it's to play the winning ones. Do you sit down at a poker table and shove chips in on every hand? If you did, you'd be broke in an hour. The smart player folds more hands than he plays. It's the same in trading. Folding is part of the game. Now, I'll tell you something about wealth. Wealth in trading doesn't come from 100 trades a week. Wealth comes from compound profits, from stacking gains over time, from avoiding the big losses that set you back months. And what causes the big losses? Impatience. Impatience to force a trade when the market isn't giving. Impatience to double down on a losing idea. Impatience to chase a move after it's already run. Tell me, have you ever chased a stock after a big breakout, thinking it's just getting started, only to watch it reverse and slap you in the face? That's impatience. That's lack of discipline. A trader's greatest asset isn't his brain, or his chart, or his system. It's his patience. Without patience, every other tool is worthless. You could have the best method in the world, but if you can't wait for your method's signals, you're sunk. That's the brutal truth. Think about the times you've lost money. Was it really because the market tricked you? Or was it because you didn't wait for your conditions? Most traders lose not because they don't know enough, but because they can't do nothing. They equate activity with progress. But in trading, it's the opposite. The less you do, the better you do, provided you only act when it matters. Can you believe that? That doing less makes you more. It's counter to everything the world teaches, but it's the truth in markets. So I tell you again, learn to wait for setups. Train your eye. Know your signals. Sit on your hands until they show, and when they do, act with conviction. That's trading. That's how you build. And don't misunderstand me, waiting doesn't mean laziness. Waiting doesn't mean daydreaming. Waiting means preparation. It means studying your charts, watching your levels, marking your conditions, and keeping yourself ready. Because when the setup comes, you can't hesitate. You can't be asleep. You've got to be ready to strike. Do you see the balance here? Too early, you're wrong. Too late, you're wrong. Right on time, you win. And the only way you catch that moment is by preparing while you wait. The truth is, trading is less about intelligence than it is about temperament. The market humbles the smartest men, but the patient man, the disciplined man, he lasts. Why? Because he can wait for his pitch. Like a batter who doesn't swing at every ball, he waits for the one in his zone. Then he swings hard. That's how you win. Are you swinging at every pitch? Or are you waiting for your pitch? That's the question you've got to answer. I'll tell you, the market doesn't care about your opinion. It doesn't care about your need for action. It doesn't care about your hopes. It only cares about setups, about conditions, about probabilities. You can't bend it to your will. You can only align yourself with it. And alignment comes from waiting until it shows its hand. Now, you may think waiting is boring, but let me tell you, there's nothing boring about catching a big move. There's nothing boring about watching a trade run in your favor while others are scratching their heads. That satisfaction, that profit, it comes only because you waited. Boredom is the price you pay for success. Can you endure boredom? Can you sit through quiet days without forcing action? If you can, you've got a chance in this game. If you can't, you're better off finding another line of work. I used to watch the crowd. The crowd loves excitement. They love the chatter, the tips, the action. But the crowd is usually wrong. Why? Because they're impatient. They can't sit still. They must always be doing. And that's why the crowd loses. If you want to win, you've got to learn to do the opposite. Stand apart. Be patient. Wait for your setups. Doesn't it make sense that if the majority loses, you've got to act differently than the majority? And remember, money is made in the big swings, the great campaigns. That's where wealth comes from. Not in scratching for pennies. Not in scalping noise. The big money comes from identifying a real move and riding it. But to ride it, you must first wait for it. And most can't wait. They want the thrill now. They want the profit now. And so they miss the big moves because they were too busy chasing small ones. So I ask you, do you want excitement or do you want wealth? Do you want to feel busy or do you want to be right? Because you can't have both. Trading for excitement is a losing game. Trading for setups is the winning game. And every day the market whispers tests in your ear. Here's a little move, do you want it? Here's a false breakout, will you chase it? Here's a setup that's almost ready, will you jump the gun? And every day your discipline is tested. Do you fail those tests? Or do you pass them? That's what decides your future in this business. The hardest lesson of all is that you don't need to be active to be profitable. You don't need to be clever to be successful. You need only to be patient, disciplined, and ready. The setups will come. They always do. The question is, will you be there with money in hand and mind in control when they arrive? Or will you have wasted your capital and your confidence on impatience? That's the choice every trader faces, every single day. When I say that folding weak hands preserves capital for the right opportunities, I mean it in the most practical, hard-learned way. This business is no different from a card table. The fool plays every hand because he thinks that to win he has to always be in the game. The wise man folds more than he plays, because he knows the true test isn't in how many hands you enter, but in how many you avoid. Do you understand the difference? Trading is about survival first and profit second, and survival depends on your ability to protect your stake. Every dollar you put into a poor trade is a dollar you cannot use when the real trade shows up. Think about that. Isn't that the most overlooked truth in this game? You only have so much ammunition, and wasting it on weak setups is the fastest way to run yourself out of the war before the battle even starts. The market doesn't care how badly you want to be in a position. It only cares about probabilities, and probabilities don't favor the trader who insists on forcing weak hands. I've seen men trade like gamblers, throwing chips at every pot, convinced that somehow the constant action would tilt the odds in their favor. But the market isn't a casino, and you're not playing against luck. You're trading against human emotion, crowd psychology, supply and demand. And when the setup isn't there, when the pattern isn't clean, when the odds aren't aligned, you've got to fold. Can you do that? Can you watch the chart move and resist the urge to chase it? That's the hardest thing for most. Preserving capital is more than just holding on to money. It's preserving your confidence, your clarity, your discipline. Every weak trade that ends in a loss eats away at your mental reserves. It doesn't just cost you dollars, it costs you patience. It makes you desperate to win it back. And desperation is the graveyard of traders. How many times have you seen yourself throw good money after bad, just to make even? That spiral begins with one weak hand you couldn't fold. I remember times when I had cash in my pocket, and the tape looked tempting but not right. The old me would have taken the shot just to feel alive in the market. 9 times out of 10, it would cost me. The smarter me learned to step back. Better to sit in cash and look stupid than to sit in a losing position and feel trapped. Do you see the difference in power? Cash is power. A bad trade is weakness. Every time you fold, you strengthen your position. Every time you force, you weaken it. Most traders hate being on the sidelines. They think money must always be working. But in truth, cash is also a position. Sometimes the best position you can hold is none at all. When you fold the weak hands, you're holding cash, and that cash is ammunition. That's what keeps you alive long enough to take the strong setups when they appear. And when those strong setups come, you'll be glad you kept your powder dry. You can't catch every move, and you shouldn't want to. The market is full of noise, full of half moves, false starts, fake breakouts. If you try to chase them all, you'll bleed yourself dry. Folding weak hands means letting go of the need to be right all the time. It means admitting that not every opportunity is yours to take. Does that bruise your ego? It should. Trading isn't about ego, it's about discipline. I'll tell you something, the biggest trades I ever made, the ones that set me ahead, they only came because I had the capital ready to seize them. And the only reason I had that capital ready was because I didn't waste it on the weak ones before. Folding weak hands isn't about missing out, it's about keeping yourself prepared. How else do you expect to build wealth in this game? You think wealth comes from chasing scraps? No. Wealth comes from catching meat, and you can't catch meat if you've starved yourself on scraps. It's tempting to think that a small loss doesn't matter, that a small mistake is harmless. But add them up, one after another, and soon you've dug a hole you can't climb out of. Weak hands don't just cost money, they create habits. Every time you play a weak hand, you reinforce impatience. Every time you fold it, you reinforce discipline. Which habit do you want to build? Which habit do you think makes you richer over the years? Let's put it plainly in trading, folding weak hands is the same as protecting your future. You don't know when the next big setup will arrive. Maybe it's tomorrow, maybe next week. But when it comes, you'll need money to act. If you've blown it on poor trades, you'll be watching opportunity pass you by. How many times have you said to yourself, if only I had the capital now, I'd take this trade? That's the punishment of weak hands. That's the cost of impatience. And don't fool yourself into thinking you'll make it back easily. The market doesn't hand out second chances. When the right setup comes, it doesn't wait for you to rebuild your account. It rewards the man who's ready, and it leaves behind the one who wasted his stake. That's the brutal truth. Can you stomach it? Think of the crowd. The crowd always wants in. The crowd can't fold. They chase, they hope, they cling. And the crowd always loses. If you want to stand apart from the crowd, you must act differently. You must fold when they play. You must sit when they run. You must wait when they rush. That's how you preserve your capital. That's how you last in this game. Every fold is a decision. Every fold says, this is not my hand. This is not my trade. That's power. That's control. The amateur thinks folding is weakness. The professional knows it's strength. Which one are you? I've sat for weeks, even months, without a trade. People said, Jesse, you're missing the action. But I wasn't missing anything. I was waiting for my hand. And when it came, I played it big. That's the difference between dabbling and trading. Dabblers nibble at weak hands and end up broke. Traders fold them, wait and strike when the odds are right. Weak hands whisper in your ear, maybe this time. They look almost right, almost ready. But almost doesn't pay. Almost setups are how brokers get rich and traders go broke. Folding weak hands means you understand that almost is not enough. It's either right or it isn't. And if it isn't, you keep your money in your pocket. Isn't that the simplest rule, and yet the hardest to follow? Preserving capital isn't glamorous. It doesn't feel exciting. Folding a weak hand doesn't make your pulse race. But it's the habit that separates those who last from those who burn out. Excitement is for gamblers. Wealth is for traders. And wealth is built on discipline, on patience, on folding the weak so you can seize the strong. The beauty of this rule is that it never changes. Markets change, technology changes, patterns shift, but the principle of preserving capital by folding weak hands is eternal. It worked in my time, and it will work 100 years from now. Because it's not about charts or machines, it's about human nature. Human nature is impatient, greedy, fearful. Folding weak hands is the antidote to all of that. It's the one edge you can always control. So I ask you, the next time you see a chart that looks tempting but not perfect, what will you do? Will you fold, or will you play? Will you preserve your capital, or will you risk it on a weak hand? That decision, repeated again and again, is what makes or breaks you in this business. When I tell you that preparation during waiting is as important as execution during trading, I mean it in the most literal way. People think waiting is idleness, as if sitting outside of the market is wasted time. But waiting done right is the hardest kind of work. Waiting is studying, it's sharpening your edge, it's conditioning your mind so when the moment comes, you don't hesitate. Do you think a trader just wakes up, clicks buy or sell, and fortune falls into his lap? No. The fortune is built in the quiet hours, when he is watching, recording, analyzing, and preparing. There were days in my life when I wouldn't make a single trade. Not one. To outsiders, it looked like I was doing nothing. But inside, I was working. I was watching the tape, I was marking my charts, I was learning how the stock acted when it was strong and when it was weak. That's preparation. Because when the time came, when the setup lined up, I already knew the stock like an old friend. I knew how it breathed. I knew how it reacted. That allowed me to act instantly, without hesitation. Can you see why waiting must be active, not passive? Preparation is what gives you conviction. Without it, even the best setup can feel uncertain. Think about it. If you've done no work during the waiting, if you haven't watched the levels, the ranges, the volume, when the move finally comes, you'll second-guess yourself. You'll hesitate, you'll doubt, you'll play small when you should play big. And hesitation costs money. But if you've been preparing all along, the moment the signal fires, you're ready to strike. Isn't that the edge you need? Many traders confuse patience with laziness. They say, I'll wait for my setup, but they do nothing while they wait. Then, when the setup appears, they're unprepared. They fumble their entries, they size wrong, they panic when the stock wiggles. That's not patience, that's neglect. Waiting is not an excuse to stop working. Waiting is the work. Do you understand the difference? I'll give you an example. Suppose a stock has been consolidating for weeks. The amateur waits by ignoring it, hoping that one day he'll glance at the chart and see a breakout. But the professional studies it daily. He notes the narrowing range, the volume patterns, the way the buyers step in at support. By the time the breakout comes, the professional is ready. He knows the price levels that matter. He knows how much he's willing to risk. He knows the exact trigger. When the moment comes, he doesn't hesitate. Who do you think profits more, the man who waited by ignoring, or the man who waited by preparing? Execution is fast. Execution is the moment you press the button. That takes seconds. But preparation takes hours, days, sometimes weeks, and it's the preparation that makes the execution possible. Without preparation, execution is nothing more than guessing. How many times have you taken a trade just because it looked good enough without having done the real work? And how many times did those trades turn into losses you couldn't explain? That's the price of failing to prepare during the waiting. Markets reward readiness. They punish sloppiness. The setups appear suddenly, often when you least expect them. If you haven't been preparing, you'll miss them. Or worse, you'll recognize them too late. But if you've been doing the work, if you've been studying quietly, in the waiting you'll spot them instantly. Isn't that the difference between catching the move early and chasing it after it's already run? And let's not forget the mental side. Waiting without preparation breeds boredom. Boredom breeds impatience. Impatience breeds mistakes. But waiting with preparation keeps your mind engaged. It keeps you focused on the bigger picture. You're not staring at the screen hoping for something to happen. You're actively studying the conditions, refining your plan, rehearsing your response. That keeps you sharp. Can you see how this turns waiting from torture into training? The money in this business comes not from trading more, but from trading better. And trading better comes from preparation. Every great trader I ever knew spent far more time studying than trading. They spent their waiting hours building knowledge, building plans, building conviction. That's why when the time came, they looked fearless. It wasn't fearlessness, it was preparation. Imagine a soldier on the battlefield. He doesn't win because he shoots at everything that moves. He wins because he trained in advance, because he knows his weapon, because he studied the terrain. By the time the battle begins, half the victory is already decided by the preparation. Trading is no different. Do you really believe you can win battles in the market without putting in that kind of preparation? Preparation also protects you from surprises. The market is full of traps, false signals, head fakes. If you haven't prepared, you'll fall into them. But if you've been studying the behavior of the stock, if you've been marking your key levels, you'll know when something doesn't add up. You'll know when to step aside. That's the difference between the man who gets caught in every false breakout and the man who waits for confirmation before acting. And preparation doesn't just mean chart watching. It means preparing your mind, your risk plan, your expectations. Before you take a trade, you should already know where you'll exit if you're wrong, where you'll take profits if you're right, and how much you're willing to risk. That's not something you figure out after you enter. That's what you decide during the waiting. So when the moment comes, you don't waste time thinking you just execute. Doesn't that make sense? Most traders blow up not because they can't find setups, but because they don't prepare for them. They enter with no plan, no context, no clarity. They act impulsively, and the market punishes them. If they used their waiting time to prepare, they'd avoid half their mistakes. But they don't. They confuse being flat with being idle. They let boredom turn into recklessness. And that's why most of them fail. There's another thing about preparation: it builds patience. When you're deeply involved in studying, marking, analyzing, you're less tempted to chase noise. You're less likely to force trades. Because you know what your setup looks like. You know what conditions you're waiting for, and you can measure everything else against that standard. That makes it easier to say no to weak trades. Isn't that the key, having enough clarity to refuse the bad ones? Preparation also strengthens discipline. The more work you put into waiting, the less willing you are to waste it on poor decisions. If you've spent days preparing for a certain setup, you won't squander your focus on random trades. You'll respect your own process. But if you haven't prepared, you'll treat every wiggle as an opportunity. That's the danger of unprepared waiting. I've seen it countless times. A trader spends weeks doing nothing but staring at the screen, not preparing, just waiting. Then a move comes, and he jumps in blindly, unready, over-leveraged, without a plan. And when the market turns against him, he panics because he didn't prepare his exit. He loses, and he doesn't even understand why. Contrast that with the trader who used his waiting time wisely. When the move comes, he knows exactly what to do. Win or lose, he acts according to plan. Which one do you think survives in the long run? Execution gets all the glory, but preparation is where the real work is done. You don't see the profits piling up during waiting, but they're there, hidden in the discipline you're building, in the mistakes you're avoiding, in the clarity you're gaining. The profits show up later, when execution is fast and clean, because the preparation was thorough. The market tests you every day. It tests whether you're willing to wait, whether you're willing to prepare, whether you can hold your discipline when nothing is happening. Most traders fail those tests because they treat waiting as wasted time. But if you treat waiting as working time, you pass the test. And passing that test is what keeps you in the game long enough to win. Wealth builds from avoiding unnecessary trades as much as from winning ones. That sounds simple, doesn't it? Yet most traders never grasp it. They think the road to riches is paved by piling on trade after trade, stacking one win on another like bricks in a wall. But wealth in this game isn't built only by what you win. It's built just as much, maybe more, by what you don't lose. Do you see the shift in perspective? Every trade you don't take is an act of wealth building, provided it's one of those unnecessary, low-quality setups that would only bleed you dry. When I look back at the campaigns that made me money, they weren't made by endless activity. They were made by selectivity. By saying no more often than yes, by refusing to get caught up in the urge for action. You may not realize it yet, but restraint is the most profitable skill a trader can learn. How many times have you told yourself, I just need to trade more to make more? And how many times has that left